October is living up to its image. I'm Angela Miles with the Russell Report. This week, the Russell tumbled below 1,500, and on Thursday, that ominous and bearish death cross pattern appeared on technicians' charts. That's when the 50-day moving average crosses below the 200-day moving average. Tends to be an indicator of a short-term decline that could run into an even steeper drop, according to MarketWatch. And they note that the last time that happened was November 14th. So we'll see what happens here. Taking a look at the market today, right now the Russell is at 1490 following the jobs report. 136,000 jobs added to payrolls, but that was below expectations. The unemployment rate dipping down to 3.5%. The ratio on the tape so far in the Russell, one call trading for every 1.6 puts. Now, surprisingly, not that put heavy given the bearish tone this week. The October 1390 puts expiring in a couple of weeks, getting a lot of play. The RVX right around a 21. Yesterday we hit a 24.39. The straddle for this week indicating a move of around 2.4% up or down. Keep in mind, Fed Chair Jerome Powell speaking today, so the premiums are built up. Up next, some trader talk. Scott Bauer, the CEO of Prosper Trading Academy, joins me now. What would you be doing with the Russell at this juncture?
You know, I'm sitting and watching here because the rally that we're seeing based off of the unemployment numbers that we got, I don't necessarily like it. I look at the option activity in the Russell, and just yesterday, it was put to call almost 2.5 to 1. Heavy put buying yesterday. Now, last week or earlier in the week, we saw the Russell dip down below and kind of hit that death cross around the 1520 mark. So that to the upside, if we get back up there, is going to be just major resistance. However, right here, Angie, I'm kind of sitting and watching, but if anything, I'd position myself a little bit to the bearish side.
You are getting ready for a downside move, it sounds like.
You know, I just think that with the economic numbers that we've seen come out, even though this is leading the Fed towards cutting in a couple weeks and probably another cut afterwards, I look at that and say, you know what? Things are not that great right now. Now, that could change in a heartbeat. We have earnings coming up. You know, the whole cycle starts in a week or two. That could really change. But in the short run here, I don't think volatility is going away at all.
Scott Bauer looking to fade that trade. Thanks so much, Scott. That's a wrap for now. I'm Angela Miles. Have a great day, everybody.